US dollar is almost down 8% since the start of the year, and if we count from the peak, it's likely down almost 10%. So many people have speculated, is it China that's putting the screws on the United States dollar? Let's find out. Here we have a video from downright, a finance YouTuber who explains this theory. Let's watch.
So China is selling off US Treasury bonds.
The nuclear option. That is,
I think he means to say question mark, because we don't know for a fact if China is doing it, as I'll explain as we watch the video.
selling US treasuries, US bonds.
Beijing striking back today with a 125% tariff on all U.S. goods sold in China. This comes after President Trump placed a 145% tariff on Chinese imports.
And what I learned this week is that the most important thing to look at right now is not the stock market, it's the bond market and their interest rates. Now, right now, the yields on what's called the 10-year Treasury are going up. And that's because when countries like China start to sell off US debt, which are their Treasury bonds, it creates a ripple effect that hits everyone.
Again, we still don't know for sure if China is selling it. Even if they were, the facts don't support it. They would be hurting their own economy if they were selling it. People are speculating that China was selling it, and then speculation led to this video. Hopefully he explains in the video that.
Which means to get new investors to buy US debt, interest rates have to go up, not down. So I want to help explain exactly what's going on, because this might actually be part of a strategy not to crash the markets, but to corner China, the same way we cornered the British pound in the 1990s. And once you see it, it's going to explain everything that's happening today and how it's going to affect your 401ks, rising mortgage.
Is that true? Okay, now people don't agree. It wasn't even Japan, as some of the comments say. And it wasn't even Canada. I've seen some people say that it was Carney, who's a banker, who's temporary prime minister. A lot of people are speculating that it was him who's putting pressure on the United States because of the 51st state comments that Trump has made. Again, comments are kind of dumb in my opinion. We should not be disrespecting our allies like that. But it's not Carney who's doing this. Yeah, I don't think comments agree with what the video says. Let's continue watching.
It's all the way to the emergency Federal Reserve rate cut. So let me break this all down and explain exactly what's going on, and I'm going to show you what I'm personally doing with my money, so let's get into it. Hi, my name is downright. Hope you're doing well. Come for the finance and stay for the 401k Hunger Games. I used to have a 401k, now it's a 0k. So this video is about to get insanely complicated really fast, but if you stick with me, I promise it'll make sense, and if you get through it all the way and you understand it, you're a nerd and I appreciate you. So here's what just happened. In early April 2025, something happened to the bond market that usually never happens, which was the sell-off of US Treasuries. By the way, whenever you hear me say treasuries or bonds, they're the same thing. I'm using them interchangeably. Now, the most important one of these treasuries is the 10-year Treasury bond and its interest rate. And the 10-year interest rate or yield went way up recently, which is completely the opposite of what we want to happen. And all signs point to China and Japan.
No, all signs do not point to China and Japan. Okay, I want to, before we go forward, I want to show you. It shows who owns US debt, okay? And one thing people keep referring is, this is the totality. The blue is citizens and US companies, so people like you and me and hedge funds and all that. So that's the Americans basically. And the red is foreign people, so foreign companies, foreign countries, stuff like that. A lot of people say China owns 9% of the foreign debt, which doesn't really matter. Like, we don't need to clarify. Like, there's no difference between a debt held by a foreign country or debt held by US citizens. It's all the same thing. So we should be looking at how much China owns of the total. And in reality, it's 2% here. But if you update it, I don't know when this article is from. It's from 4 months ago. In January, we got updated numbers, and China owns about 760 million. So even less than what it shows over here. So I would not say all signs point to China and Japan. A lot of people on Twitter were pointing to China and Japan. I think that's what he's referring to when he says all signs point to China and Japan.
Investors believe that right now, foreign countries, especially Japan and China, which are the two biggest holders of US debt, are dumping.
Two biggest foreign holders. Again, that's an important distinction that he didn't say. They're the two biggest foreign holders. In reality, US citizens and US companies own 76%. So way bigger than any foreign country.
US Treasury holdings as a way to fight back against President Trump's tariffs. And this isn't just coming out of nowhere. China's been slowly pulling out for years. In fact, by the end of 2024, they were already down to about $760 billion in US debt, which is the lowest level since 2009. And all of this was started by just one move: tariffs. On April 9th, 2025, President Donald Trump hit China with 104% tariffs on all Chinese imports. China then responded immediately with a 50% retaliatory tariff on all US goods. That raised China's total tariff on American imports to 84%. And if you think that's crazy, President Trump came back again and raised the US tariff to 145%. And then China responded with their own 125%. All of this, by the way, happened in just 1 week. So it's no wonder the stock market just can't decide whether it wants to go up or down right now. But here's where it gets interesting. While President Trump raised the tariffs on China, he actually paused or lowered on a bunch of other countries. So now the pressure is on China. And what did China do? They didn't just raise the tariffs. They filed complaints with the WTO. They put restrictions.
Important to point out, in 2024, there were roughly 400 complaints, so 400 lawsuits in the WTO. Do you guys want to take a guess how many of them were against China? Almost 200. 198 complaints were just against China, and WTO has 166 countries. So over 160 countries, and one country has more than half the complaints that were filed in the last year. So it's not just the United States that's saying that China's practices are unfair. A lot of other countries agree. And these aren't just Western countries. It's not just Europe, US, or Australia that are filing all this. 117 cases were from the global south. This includes countries like Pakistan, India, Brazil, all these countries that you would think maybe are on the side of China. Even Russia put sanctions on Chinese trade, on Chinese imports at the start of this year, so in January. So it's not just the United States who's unhappy with Chinese trade practices. Pretty much rest of the world.
Restrictions on 18 American companies. They restricted exports of rare earth materials, and the biggest move, they started selling US treasuries.
No proof of that. Everything else is true what he said, and then he threw in this one thing that's pure speculation.
That last one is the one that makes investors really scared. And that's because when China sells...
By the way, another point, yes, the whole different point is like, yes, the rates were going up, okay? So that means someone from here was selling, someone on this whole thing. We don't know who. Actually, many people said it was Japan because they are the biggest foreign debt holder of the US treasuries, right? But Japan came out and publicly made a statement that it was not them. China has made no such statement, right? So we don't know if it was China or not. Clearly what they own is a sizable amount, but China owns roughly 2%, a little bit less than that. And domestic players own roughly 76%. So I would say it's much more likely someone domestic was selling, and it's much more likely that a hedge fund was selling. You see the stocks were going down, and a lot of these hedge funds, they like taking out leverage to invest in stock market, or margin, I think they call it in the investing world. And when the stocks go down enough, a lot of the risk players, a lot of the risk manager, basically your brokerage, they call up these hedge funds. They'll be like, hey, you got to put up more cash. And all these hedge funds, the way they get access to cash is by selling the treasuries they own. So it's much more likely that hedge funds were selling than China. Again, both of us are just guessing. And I'm being upfront that we don't know for sure, but if we just look at probability, it seems it was probably someone who was selling to get access to cash, and it wasn't China selling to crash the US economy. The reason I'm so confident saying this is because the demand for US Treasury is still sky high. In fact, right after President Trump paused the tariffs, on Wednesday, I think he paused it, on Thursday, we had a Treasury auction. So the US Treasury was selling $20 billion in more bonds, new bonds basically. And that auction was oversubscribed. So basically there was more demand than supply. So clearly investors around the world still think US Treasuries are trustworthy instruments for holding their cash. And the reason yield is going up is likely because someone was being forced to sell because of the stock market crash.
Their treasuries, the bond prices fall, and that means our interest rates go up. But first, let me just explain why everyone is freaking out over the bond market and why it's so important. Now, the bond market is so important that it can control interest rates, it can control the central bank, the stock market, and even the president's actions. So let me just first explain how bonds control interest rates and the cost for us to borrow money. See, most people think that it's the central bank, the Federal Reserve, that sets our interest rates. But that's not completely true. The Fed controls short-term rates, like what's called the overnight lending rate between banks and the federal fund interest rate. But long-term rates, like the 10-year Treasury, are controlled by the market, by buyers and sellers. Now, if countries like China are selling bonds, the Fed can't
See, this, like, everything in the video is, like, all accurate and true, except the part that China is selling. That's the speculation, but the way he's presenting it is like he knows it for a fact.
stop that overnight. So what happens then to interest rates when bonds get sold off? Their rates adjust upward. And that's because bond prices and their interest rates move in opposite directions. If the price of a bond drops, the yield goes up. So here's an example. Let's say a bond pays you $50 a year. If that bond was worth $1,000, that's a 5% yield. But if it drops to $900 and you still get $50 a year, you're now earning 5.5%. And that's what we mean when we say yields are going up. That means bond prices are dropping, and they're dropping because someone is selling. But now, imagine hundreds of billions of dollars of bonds being sold at the same time by China and by other foreign governments that are watching this play out. That forces US yields even higher, so interest rates go up, and that's exactly what we're seeing right now. And this is a big deal because higher yields make it more expensive for the US to borrow money. And with over $30 trillion in national debt, that's not good.
Also, another big problem is almost 33% of our debt, so I think 11 trillion based on what we see here, is due for refinance in the next 12 months, and I think 25% is happening in June. So it's very likely that we're going to refinance at a very high rate, probably 4%, 4.5%. So that just means the interest payment we pay out on this debt is going to be even higher.
And if interest rates get too high too fast, it can break parts of the US economy and force it to deleverage. And bond markets can also force the president to do exactly what he just did, to back off the tariffs for 90 days so we don't break even more parts of the US economy. That's how China is fighting back. It's dumping US treasuries, which forces interest rates upward and breaks part of the US economy. That's why the Fed might have no choice but to drop rates.
This is what happens when China has direct access to TikTok. You know, like, they can spread these speculation theories and people start to believe it.
And this is where I want to share with you a new theory about what's really happening. It involves this guy, Scott Bessent. He's President Trump's Secretary of the Treasury. Now, in the early 1990s, Scott Bessent, along with George Soros, broke the Bank of England. And here's how they did it. Back then, the UK was part of what's called the ERM, the Exchange Rate Mechanism, which was a European agreement to keep currency values relatively stable against the Deutsche Mark.
There are going to be no devaluations, no leaving the ERM. We are absolutely committed to the ERM. That is our policy. It is at the center of our policy. We are going to maintain sterling's parity, and we will do whatever is necessary. And I hope there is no room for any doubt about that at all, that the government is determined to maintain our position.
The UK wanted to keep the pound within a specific price range, and to do that, they had to defend it by raising interest rates or using foreign reserves if needed. But there was a problem. The UK economy was weak, inflation was high, unemployment was going up, and most importantly, interest rates were already way too high for their economy to handle. So Scott Bessent and George Soros realized the UK couldn't keep it up. They believed the pound was overvalued, the UK couldn't defend itself forever, and eventually they'd be forced to make a choice. Either devalue the pound or leave the ERM. So here's what they did. They shorted the British pound. That means they borrowed pounds and sold them, betting that they could buy them back later for a lot cheaper. Some reports say they bought over $10 billion worth of shorts. But they coordinated this with other big institutions who saw the same opportunity. And when Bank of England tried to defend the pound by raising interest rates and buying pounds with their reserves, George Soros and Scott Bessent just kept selling into it. Eventually, the pressure was too much, and on September 16th, 1992, the UK withdrew from the ERM.
A unique day in London's financial markets ended with the Chancellor announcing that the pound...
I still don't get why we're comparing to UK, because if you're trying to bring this back to US dollar, as the title says, it's like comparing apples to oranges.
...was being suspended from the ERM, and that the second of two dramatic interest rate rises during the day was after all cancelled.
Today has been an extremely difficult and turbulent day.
The pound crashed, and that day became known as Black Wednesday. And George Soros made over $1 billion on this trade. And Scott Bessent was the key architect behind how it happened. So the question is, how does all of this relate to China and what's happening right now? And why this all relates is because Scott Bessent is recreating a situation where a country is forced to make one of two very hard decisions. China is forced to choose between weakening their currency or defending the yuan. Now, if China weakens the yuan, that would be good because it would make exports cheaper and help offset the impact of President Trump's tariffs. But it could also trigger a panic inside of China because that would create inflation, and investors might rush to move their money out of the country. It could make borrowing a lot more expensive, and it could even destabilize China's...
Investors are already rushing to leave China because, first of all, CCP has tight capital controls, and on top of that, all this trade war, people want to rush to save assets. And yuan is clearly not that because CCP has a habit of devaluing it, as he just said.
His entire financial system. It's called a flight of capital, which is money leaving that country and being invested into other foreign assets like gold, Bitcoin, and things like that. That's a very hard decision to make.
Wait, is this sponsored by Moomoo? Ah, it's a Chinese company.
Or there's option number two, which is what China's choosing to do instead right now. And that is to keep the yuan strong and to defend the value of their currency by selling their US dollar reserves to buy up the yuan. But to get to those dollars, they have to sell US Treasury bonds. And that's exactly what we're seeing right now. So from the outside, it looks like China is retaliating against the US, but they're also doing it to keep their own system from falling apart, because they have to. The real question is, how long can China sustain defending its currency before they run out of dollars to support?
Okay, but here I want to bring up a interview just Scott Bessent did, the person he's claiming to be the mastermind behind China doing all this, which he likely is, or behind the trade war thing. Maybe he didn't pick the reciprocal tariff numbers, but it was his idea to slap other countries with tariffs. And this is what he said about China selling all this. I think it's somewhere around here.
The yield on the 10-year, that is why I assume rates are moving up. The yield on the 10-year, we were wondering if there was a deleveraging issue, and whether or not China is dumping treasuries. Is that what you see right now? Is China dumping treasuries to try to put pressure on this this market?
Maria, I think it works against their purposes if they are dumping treasuries, because if they're dumping treasuries, then they have to buy something else. If they sell dollars, then they strengthen their currency. And as I said earlier, they've actually been weakening their currency, which is a loser for everyone.
Right.
And again, when I hear all these stories, that the dollar is no longer going to be the reserve currency. If you end up with the Chinese who are willing to use their currency as a trade tool, that doesn't seem like a very good reserve asset to me.
Yeah, very good point.
So yeah, also we can look at the chart and see if China is selling dollars, because here, this is Chinese yuan or renminbi, whatever they want to call it. And when did the thing start? April 2nd or 3rd, something like that. We can see that the yuan went down a lot. It's going up a little bit now. Actually, it's gone up quite a bit now, but if they were selling it, it would go up. It would be in the positive, because you sell the dollar, you have to buy something. And if they were defending this, it would be going up, not going down.
Themselves. And China's looking at the US and thinking the exact same thing. How long can the US allow their bond market to be so high and to have this high interest rate before their own economy unwinds, goes into a recession, and they have to refinance $9 trillion worth of debt in 2025 at this super high interest rate. That's why there's a capital flight in the US as well. Money leaving the US stock market because investors are saying, we're just going to wait and see how this all plays out. Which means we're full circle. We're right back to the bond market. That's why yields are spiking, mortgage rates are going up, and why everyone is panicking about the debt again. It's a race against time for both countries, and in that sense, it's not helping anyone. So if this is really Scott Bessent's strategy, he's trying to engineer a situation where China's under so much pressure, every move they make just creates more problems, with the goal that both countries come together to negotiate something more favorable for both of them. So the next big question is, what happens if China keeps selling US treasuries?
They're not selling it. I just showed you guys. This is the crazy part. Like, it's a really good video outside of the main point where China is selling the treasuries. Like, they explain a lot of things. He explains a lot of things way more simpler than like we usually do, and that's a good thing. But yeah, I want to see the comments real quick. Yeah, right here, someone actually commented this. What did the reply say? China can't, because if China sells US treasuries in US dollars, that strengthens yuan, and that means if any exporter from a different country wants to buy Chinese products, it will cost him more, because if yuan's value keeps going up, that means every dollar I spend to buy the Chinese currency, I'll get less and less. That means I have to spend more dollars. So instead of going to China, I would just go to Vietnam, or I would go to India, or I would go to Cambodia to get my products. And that's not something China wants. So they would rather keep the Chinese currency low, not high.
Good. First, US interest rates could go up, making mortgages, credit cards, and of course car loans a lot more expensive. So the Federal Reserve might have to step in and start buying US treasuries to stabilize the bond market. It's basically quantitative easing all over again, QE 2.0, and we've seen what happens when the Fed prints money. Any day now, we could see the Fed step in to do this. But the worst case scenario is a full-blown financial decoupling, where the US and China stop trusting each other's money completely. And that's how you get two separate economic systems, or two world reserve currencies. Now, we're not there yet.
China will never be a reserve currency. This is like these random topics that come, because China, let me pull this up actually. So this is a little old, but where's the chart? Okay, 2022, end of 2022. But look at this. China is nowhere in the top. We have US dollar more than 50%, euro, yen, and sterling. In fact, if we combine these top four, it's more than 80%. And China comes in at 5th. The reason people don't trust the Chinese currency as a reserve currency is because it's not a market currency. We don't know the true value because CCP purposefully devalues it to make sure the Chinese exports stay cheaper. So the chances of China becoming a reserve currency is like close to zero. But that doesn't mean the US cannot lose the reserve currency. It's likely going to be, if we do lose the reserve currency status, the US dollar, it's going to be like a combination of top 4, maybe even top 5, including China. But China will not be able to replace dollar with the yuan.
But every move we make from here on out matters a lot. And the good news is that no one knows exactly how this ends, not even the people that are in charge. We are just making it up at this point.